Today we have with us Mr. Naveen Agrawal, MD of Motilal Oswal Financial Services Limited. Sir, could you tell us if you are seeing some pressures on your yields and profitability in the broking business given the falling retail cash?
In fact, there is no contraction in the yields like to like. So, if you look at the institutional business or the retail business, or if you look at the cash markets versus the futures market, there is no contraction in yield in any of these segments. The reason why you are seeing a contraction in the overall reported yields is because there's a mixed change in favor of the futures and options market that has been continuing for the last 5 years, which is consistently pulling down the overall reported yields, including futures and options segment. If you look at the profitability for the year ending March 2017, Motilal Oswal Securities, which is the broking business of the group, has reported a 30% growth in top line and more than double that growth in bottom line. So clearly, profitability has seen significant improvement on the back of top line growth and on the back of the operating leverage. So the business remains extremely profitable, and we are not seeing any pressures on profitability.
Going forward, what will be your strategy to capture this shift from physical savings to financial savings?
In fact, Motilal Oswal Financial Services is lucky to be on the right side of the transition from physical savings to financial savings. In our asset management business, we have seen continued strong inflows of nearly 6,000 crores for the year ending March 2017. In fact, our assets under management have doubled from just about 10,000 crores in March of 2016 to 20,000 crores as of March of 2017. We were at 15,000 crores AUM in December of 2016, and during this quarter alone, this 15,000 crore number, on the back of market appreciation, resulting in an AUM accretion of 3,000 crores and net inflows of 2,000 crores, has led to a closing AUM of nearly 20,000 crores. So we are very excited about the prospects of increasing part of savings being channelized to financial savings from physical savings earlier. And whether it is our mutual funds, whether it is wealth management, whether it is our equity broking business, both retail and institutional, each of these businesses are reasonably big beneficiaries of demonetization. They are reasonably big beneficiary of the transition from the physical savings to financial savings, which we expect will only continue even in the future.
What could be the trajectory of your businesses going forward in financial year 18?
So the two annuity businesses that have been a big driver of growth in FY17 are the home finance business as well as the asset management business. In the home finance business, we have seen our disbursements grow from 1,800 crores in March 2016 to 2,400 crores in March 2017. As a result, our loan book has doubled from 2,100 crores in March 2016 to 4,100 crores in March 2017. Given the strong disbursement trend for the year at 2,400 crores and the fourth quarter at over 900 crores, we see continued strong growth in the loan book of the home finance company. As far as the asset management business is concerned, there too we've seen nearly 2,000 crores, 1,900 crores of inflows in the fourth quarter, leading to a closing AUM of 20,000 crores. So we see continued strong growth in the AUM of the asset management business. But having said that, we are also seeing strong growth in the capital market businesses. But because of the relatively smaller sizes of the asset management business and the home finance business, clearly the growth rates in these businesses could be much higher than the capital market businesses of the firm. So we are looking at continued strong growth for the firm as a whole going forward.
Sir, finally, could you just tell us about your expansion plans going forward in FY18? If you could share us some numbers on how you plan to grow the business.
So, as far as our home finance business is concerned, we were operating in 4 states for bulk of 2017. As of the end of 2017, we've expanded our footprint from 4 states to 9 states. So the monthly disbursements collectively in these 9 states is about 1 lakh crore versus 50,000 crore disbursement for the earlier 4 states. So our addressable market for the home finance business is effectively doubled for the year FY18. As far as our asset management business is concerned, all of our products in the mutual fund business complete 3 years of performance and stellar performance. We are looking at more distributors starting to distribute these products on the back of strong performance as well as the track record of performance that these asset management products have delivered. Besides this, currently nearly two-thirds of the institutionally managed assets in India are managed by foreign investors, and only one-third of the assets are managed by domestic investors. We have zero presence as far as the foreign institutionally managed assets are concerned, while we have a 20,000 crore AUM in the domestic institutionally managed assets. So we are looking at gaining a worthwhile share in this foreign pool of assets over the coming years. Lastly, as far as our asset management business is concerned, our share in the flow of mutual funds, inflow of mutual funds, is at about 3%, while our share in AUM is just about 1%. With the continued performance and wider acceptance by distributors and investors of our products, we are hoping to see a convergence in these two market shares. So each of these businesses offer reasonable headroom for growth going forward.